Yo, good morning, everybody. Back at it again. Hopefully, you guys have had a good weekend. You guys had a good week so far. Definitely started the week off with a bang. It just as a reminder, from yesterday, we took some shorts. Took the short from up here, used that as a stop run, and then we caught the decline. Equal lows. $400, not too bad. Okay. So yeah, we'll see what today offers. If you guys can, let me know in the chat. Whoever's here, let me know if you can hear me okay, see everything okay. Of course, I'm getting these stupid warnings. Not too sure why. But yeah, if you could just throw one in the chat just to verify before I get started. Don't want to get started and then, have issues. So yeah, just throw one in the chat. Let me see. Okay, it looks good on my end. All right, well, I'll just take that as it's all good. So yeah, there's no news today. We're up early because sometimes I like to get started so I can answer questions. Good morning, George. The first one is always both here on YouTube and in the private group. But yeah, hopefully you had a good week so far, George. It's like a lint in my face. But yeah, so if you have any questions, just let me know. I'll be happy to answer. We're not going to really look to engage anything too crazy until 6:30. Because when there's no news, the 6:30 open is going to be the time when they look to manipulate. Okay. And of course, as always, this is going to be our live trading call of the week. And yeah, we'll see what price can do. We can take a glance at the yields. Go to the daily chart. All right, so it's looking like we've taken that out. So if this continues to hold above this, we may see price have a willingness to go up. I can say that if it takes this out and then breaks outside of this box here, that will pique my interest to want to maybe target the lows down there. It did have a pretty shallow run below this previous week's low here. Well, basically a monthly low, or is it a yearly low? Not quite a yearly low from last year, but it is October's low from last year. They swept that, and then what happened? Big response, big reaction away. Remember, a drill that I give you guys to do has to do with looking at the liquidity mapping list that I give you guys in the free group and private group. And then, I encourage you guys to look at when those higher time frame reference points are taken, what is generally the response? It seems like a very basic study, but you'd be very, very surprised at how powerful that simple study is. And obviously that'll take you like, 10 minutes, but it's well worth it. It's a good place to spend your time. Not everything is made equal in terms of the value in back testing, but that, right, it doesn't have to be overly complex. Just go in there and see. Does it take highs and then turn, or does it take and consolidate? Does it take them in, just keep breaking through? Is there a shallow retracement? Is there a deep retracement? Is there a reversal? You make these observations, and then over time you start to get familiar with what you should expect when price takes a significant higher time frame reference point, and how you should go about engaging it or just observing it. Okay, so again, we do got a breaker in here, so I'm definitely going to keep tabs on that. If this continues, say, we took this low, say, well, you can also see there's a quarterly order block here too. Big response from this big PD array. It's generally how it is. That's why you want to almost always couple your frameworks, couple your PD arrays that you're going to trade off of with the higher time frame, right? Because once it tags these levels, if it's going to move, it's going to move. So, the more that you study this with this in mind, the more that you position yourself around these levels from that higher time frame, the better chances you'll have in being, part of the largest portion of the moves, right? Just the largest moves in general, to be quite honest. So yeah. So we'll see how this breaker works. And if that gets violated, obviously we'll have to change, but we'll see. All right, we do got a bearish breaker here too, but we are inside this larger bullish breaker. If it does get back above, this high to that low's 50% level, or say it starts to really ramp up through this, we already got a change in state of delivery from the weekly chart. So we've got that order block that's been overtaken here. Okay. So that's very interesting. We see that there's a pretty solid response from that. Not only is this a weekly bullish order block, it's also the breaker, right? So this 8-hour perspective, the down movement that took the stops, right there, rated this sell side liquidity and gave the response. That's inside of a bullish order block too. So it's an 8-hour breaker, 16-hour breaker too, a daily breaker. That's probably more important. The fact that it's a daily breaker. Daily breaker after a stop run with a change in state on that weekly perspective. So again, if this turns into a double change in state, meaning simply we trigger this, right? It shifts market structure. There's no order blocks in here, no secondary order blocks. If it gets above this, that's a double change in state, and you're almost 100% positive. Can't be 100%, obviously, and there's no guarantees, but you're put in a pretty good position when you see like a double change in state of delivery, right? Like a change in state here, and then another change in state. I always classify that phenomenon as order flow confirmed. Sometimes you have to wait. If you're not confident just yet in that moment, there's nothing wrong with waiting. And once this happens, you should see speed. It shouldn't hang around, honestly. Okay, you can couple that obviously with an inversion fair value gap, or the 2022 model, and just that logic, that understanding, that acknowledgement of the fact that there's a double change in state can really, really change your trade selection and make you a little bit more effective, I feel like. Okay, so unless something changes, I'm not gonna be, you know, too against that perspective. You see that we liquidated all that liquidity, and then we got this shift in market structure, and then almost a double change in state. It's loading up, and if that does happen again, we'll be confident that this will go higher, and then we may end up seeing that support the indices going lower continuously, especially if this is going to keep going lower as well. Go to the daily chart. We got a similar phenomenon here. We have a change in state, bearish breaker. We have a large wick in here. Price is trading into that. This is a higher time frame fair value gap. This red box. Okay, so weekly fair value gap. So again, if we can get this up movement to result in a change in state, breaking down below, this will continue to go lower. Good morning, Tony. Appreciate you hopping on as always. If you guys remember too, I have my invalidation levels up here. This is a monthly inversion fair value gap. So, or just a fair value gap in general. So yeah, you know, these the quadrants in this box here, if you take a fib from the high to the low, 25, 50, 75%, those levels are going to be acting as dynamic support and resistance. If it's bearish, we want to see it act as dynamic resistance. And we want to see those levels get, you know, rapidly traded through for the most part. So yeah, if we got bullish yields potentially, and then bearish bonds potentially, given what we see, that it makes sense for that to happen, then we should expect potential bullish dollar and continued bearish indices. Right? It's as simple as that. But this is why we look at these assets here, because now we have a rough estimate of what should happen relative to intermarket relationships, and then when we go and couple it with, say, the Nasdaq or the currencies, we're able to then use that relationship to make a decision come New York Open. Okay? Yeah, that was nasty, huh? You guys remember the other day? Well, for the last couple months, actually, since January, when price opened up in here, we were watching this wick. If you go back to some of the recordings, you'll remember and identify these quadrants helped us continue to take trades off of. The quadrants of this yearly wick, right, the previous yearly wick from last year, from the fourth quarter, it also helped us you know, understand confirmation as well. If price was going to continue to decline, we had a fractal high that formed here, or has formed, and it was rejecting. You know, stayed below the 50%. It's the same thing that we do on the lower time frame as well, right? If we see a wick being respected, bearish, it's probably going to be bearish. What could it reach for? Internal range liquidity. External was taken, so internal was targeted. And you could see pretty strong reaction from there. So, you know, we're just going to have to keep monitoring. We're right back in the middle of this, you know, nasty range. So we'll have to keep that in mind. This is nasty. I might end up just trading the currencies today. I really don't like how this is going with this. I don't like how they're holding price. There is a lot of news about the war that's going on in Iran. Apparently, the Strait of Hormuz has opened up, and as a result of that, the rapid rally in oil and gas kind of, you know, started to give a rejection now, after it swept all the levels that we pretty much mentioned right before any of this even took place. When price was down here, I, you know, was telling everybody to wait and watch. Let's see what happens. If it does displace, it could target the trendline liquidity here. I'm not so sure if it's going to get up here, depending on what the developments are in the Middle East. That'll be a pretty solid deciding factor. So we'll just have to wait and see. But yeah, hopefully this stabilizes, honestly. Gas prices where I live have already went up $1.75, which is insane, like within a week. I mean, it's whatever, but what a mess. So yeah, hopefully everything chills out, because that'll be bad for the global economy too. That could bring recession, a worldwide. So definitely keep that situation in your prayers. But yeah, so dollar is kind of sideways, right? The bonds and yields are definitely moving a little bit more dynamic than some of these other assets, like the dollar and the indices. We come over here to the currencies real quick. See how the dollar took the high there. We're kind of resting inside of this weekly fair value gap. So we got to see what happens, right? We have a higher high here. And we have bullish SMT here, with the GBP being the strength holder between the GBP and the euro. We do have trendline liquidity up here. We're gonna need it to really amplify and break some of these levels before we look to target something like this. The suspension block I outlined the other day held up pretty flawlessly. We have this up movement, right? We need to see that hold. Lots of gaps in here, huh? So yeah, we're gonna have to continue to monitor this. Unless something changes, right? Like unless this really ramps up and completely closes outside of this box here, which is the breaker. Yeah. Get this last down candle. I like to take it all the way to the low, even if the last down candle isn't the one that's created the low. If it's part of the low, I just use that. Wait a minute. Weekly. Oh. So this is actually a weekly fair value gap in here. So that's pretty interesting. So we'll see what happens with this and this breaker here. We got the low, high, lower low. We've closed above that low, so we haven't quite really broken out of it. If we move up to the 2-week chart, we also have this, right? This is a bearish order block. We were looking at that the other day. And we wanted to see if price could close down below that and then continue to drop. We do have this weekly bullish order block. Is it weekly or monthly? Weekly. So yeah, we have these down candles. Price is pretty solidly respecting that level. Pretty much came right back down to this fair value gap here. But again, we do have SMT. We have SMT here as well. You can also notice that if you take this high to the low, right, equilibrium, so that could generally lead to a problem. CPI is tomorrow, so you got to set your expectations properly. We may not get massive ranges today. We may have to go off of intraday volatility. If that's the case, you guys will see how I go about navigating that type of condition. So stick around for that. Freaking weather these days is not sitting well. Got allergies. Ugh. So yeah, we'll see. Right, we'll see what happens here. We got this low to that high. We definitely don't want to see 50% of that taken. If anything, we don't want to see this taken either, and preferably we stay below this gap here on this weekly chart. It's a new week opening gap. So we got the close there. Oh wait, whoops. So yeah, we got the new week opening gap in there. So yeah, I would say unless this high is taken right here, unless this one gets swept or displaced through, we're going to continue to try to seek sell side. Anything going higher because of the structure currently, because of the shift, because of the potentially bullish dollar, we'll see, if bullish dollar wants to continue. It should, if it's going to be in line with the yields, assuming that the yields continue to rally. And then again, that should be bearish for the other assets. We're pretty much in a seasonal influence at the beginning of the year that generally tends to favor downside, especially going into March. Another thing, now because I mentioned that we're in March, we have a new quarter coming up. So the week before, week of, and week after a new quarter rollover can generally be looked at, or should generally be looked at, as low probability, potentially high resistance. And then, of course, you couple in the fact that we have CPI. We have a couple of days that have no news, and that could lead to a problem. So we've got CPI this week. We had an NFP last week, and then we have FOMC in the coming week, right after this week. So very wild behavior. All like three of some of the main crazy news events are in this one month, which doesn't generally happen. Maybe I'm wrong. But back to back like this, I mean, we don't always see this. But again, it's that time of the year, right? We have the new quarter, so money's going to be shifting, right? There's lots of risk in the market, so I'm assuming that participation is probably not as high as it could be. That may be part of the reason why this is being held, because big players, they're on the sideline. Like Warren Buffett, he has like the biggest cash reserves on hand. He kind of saw some of this happening, so he's got enough money now to put positions on when people are fearful. It's kind of what he does ahead of these types of news events. So, or not news events, but ahead of these types of world events. So that being the case, if a lot of big institutions are not, fully in participation, and there's money that's scared right now, they generally elect to wait till a good opportunity happens or till some more clarity about the events comes about, because then he could start to make a forecast about it. And again, if that's the case, many times that's a part of the reason why things consolidate, because money is scared right now. It's very fearful. We're not at max fear, right? Not people aren't looking to sell everything they own, but it's getting there. Depending on how long this war takes, and whether the U.S. puts troops on the ground, and lots of different ways that this could go. But depending on how it goes, we could stay in here for a while, so especially ahead of a quarterly rollover, especially ahead of like CPI, FOMC, NFP, and on days where all that's present, and a day like today has no news. So this is a very important perspective and understanding to have, because you got to set your expectations. Not every day is a day you should go in there swinging for 500 to 1,000 points, or even 100 points. This is an environment that favors scalping, unless you are very accurate and have more experience to hold price. But even then, you could still be eaten alive if you're not going to manage risk and you don't know what you're doing. So I just wanted to set that expectation for you guys. I'm aiming for 20 to 30 points if I do take a trade at all, if something shows up. But I'm not demanding anything. And unless price comes to us, we're not in a rush. Okay. So yeah, do you guys have any questions? I'm gonna go to the bathroom real quick before the open. So yeah, if you guys have any questions, leave them in the chat and I'll answer them when I come back, okay? All right, I'm back. All right, let me see. Power 3, how do I identify real time? Let me ask you this. Have you had a chance to go over my Power 3 bootcamp beyond motivation? And for the most part, um, oh yeah, I do encourage you to go through my bootcamp. I did specifically a bootcamp on Power 3 because it's just that important. And then, of course, once you understand the theory, when it comes to any of these concepts, the key to finding it in real time is back testing, right? I mean, there's going to be no way around that. There's no shortcut when it comes to back testing because that's where pattern recognition comes into play. That's when observing the characteristics, because things don't look perfect every day, right? But getting familiar with the characteristics, what time things happen, um, building that muscle memory over time. I mean, it's not avoidable, right? But that's one of the main ways to get better at spotting things in real time. And then, of course, like you guys are doing right here, you're shadowing someone that uses the concept and literally refers to it every single time I'm live here on YouTube, but then every day in my private group as well. So, that can be a benefit as well. Watching someone that knows how to do it live and knows how to identify it and uses it live. But aside from that, you're going to want to understand the theory, right? One way you can do that is obviously ICT has a lot on the topic, but I have a boot camp too, and again, I do it live. And back testing is your best friend, right? For every concept. A lot of times we have a problem with back testing. Many people. I know I did at first because I was learning so much, and every time I was in the chart, I felt like the only way I could study and feel like I'm doing the right things is to attempt to apply everything that I've learned all at once. When in reality, do people that are working out to have a like to hit a specific goal, like say their biceps, they want them to get bigger, right? Are they working out every part of their body when they're trying to work out their biceps? No, they focus in on that one thing, right? And then of course mix in whatever else they're looking to target as well later on. But they give themselves, a segment of time where they're focused solely on that one thing. Well, all the concepts that you see me employ, all the stuff that ICT talks about, the best way to study is to learn each component, give it the time it deserves, constantly backtest it, right? Whatever it is, like in this case, Power 3. And then eventually you'll have to just trust that experience. And I mean, maybe even, being in this community will guide you into knowing how to put things together as the main picture, right? Or the main process overall. But it takes all the different components being practiced individually. Like I recommend that my students in my private group set up a private Discord, right? Give me access to their private Discord so I could keep tabs on them. But make a section for each concept, each playlist, each video that you watch. So then, you can have easy to refer to notes, and everything is, provably being given its own space and its own time. So then you can look back on it and think, okay, do I really understand this concept? Let me go look at my notes on that one specific concept, rather than backtesting everything that you learn along the way all at once every time. It's just counterproductive. You're not going to get as much progress in those specific areas as you would if you just focused solely on each individual topic on its own. And again, it comes together later on. Again, a community like this, a community like my private group, or here on YouTube, when I'm going live answering questions, that's a huge benefit. But again, it's all going to come back to whether you're able to isolate your studies to each individual topic, and it's something that can't be avoided. How did you trust your study when you were alone? When you were back to say, how do you know you were right? Well, first of all, I've had mentors to kind of help me, right? Like I offer, I used to hit my mentors up constantly. I have 3 mentors, 2 ICT students with over 10 years experience each, and then ICT himself. I felt, at least for me, because I'm someone that needs to be really hands-on. I mean, that's why I offer my one-on-one apprenticeship group, because I know that some people need that. And I offer here on YouTube. I really needed that help to verify. But then once I got verified a couple times, the rest was just over time experience, seeing price work, seeing it not work, seeing the concepts, succeed and fail. So, a support system is definitely helpful with someone that proves that they know what's going on. Can't just be with anyone, right? Just on the internet. They have to prove that they know what's happening. They have to prove by showing you live over months. You should never trust someone blindly ever, especially in this industry, because there's too many scumbags. And at the end of the day, if you're trying to study something and they don't really know, but they act like they know, you fast forward a year from that point, you may have been practicing the wrong thing. It's not only about studying that's important. Studying the right things is what's important, and of course we're not going to know that right away. That takes time to figure out what really is happening and how to really use things. But again, that's why a community like this, that's why I offer this type of stuff. And then of course my private group. But most people find that the value here is enough. But again, if any of you guys need that extra help, just know it's here for the future, just in case. But yeah, that's kind of how I went about studying. Studying it and then trusting what I was doing. I had people, God sent to really help me out, and it's something that is very rare in this industry, because most people are super egotistical. They're not accessible, and it's hard to get advice from people, because most people don't know what the hell's going on, and that's just the reality of it. Unless they're out here doing what we do every single day, every week, you should put everyone to the test, because again, the worst thing you could do is find someone that you're learning from who doesn't really know what's happening, and you find out late, and then you have to, unlearn all the crap that was taught to you incorrectly, you know. So it's good to have a good support system. But yeah, and then over time, right, from the couple people that I've listened to over the years, and then in my own back testing, I've already been trading for almost 7 years this year. In August, it's going to be 7 years, which is insane. So you can imagine, that much time spent. Eventually, you figure out what's going on, right? You figure out what things look like, how they're used, and luckily, I've been blessed to have, again, really good mentors, and some of the wisdom I'm able to provide to you guys, and do my part in helping traders that are just trying to learn, So I would say that's how I ended up trusting things. At first, it's a given that we're not going to know, what's real, what's not, what works, when it works, why it works. All that stuff comes with experience, and of course, it could be sped up if someone knows what they're talking about and they're here to help you, and you're part of that community, like you are beyond motivation. So, hopefully I answered that question enough. And of course, I'm on Instagram. I'm always accessible. I have my free group. I have my private group. And I always encourage all of you guys, whether you're in my private group or just a supporter here on YouTube, send me things. And if I can get back to you, I will. I won't just leave you hanging. I always get back to everyone. Because again, my goal here on YouTube and in my private group and anything that I offer in terms of my time is solely to help you guys. It's not for ego reasons. This stuff is very spectacular, and it's just not even debatable. But at the same time, that's my skill set is not the point. The whole point of me being here is to help you guys get to a point where you're confident. So, if you guys ever need anything, just let me know. Send me screenshots. If you have difficulties, hit me up. And those of you that are in my private group or just in the free Discord, keep that in mind. You can ask any question. You can share anything, unless it's, super negative and a vibe killer. Then, you could do that, but people are going to ignore you. And it's kind of a waste of your time and everyone else's. So keep it positive, right? Keep it constructive. If you have any tips and tricks as well, and there's someone else that asks a question, I just encourage you guys to also be open to passing the blessing along when you do arrive. Or even if you're not fully there yet, but you have an answer to a specific question, reach out and help your fellow trader. You know what I mean? That's the type of vibe that's been built here and in my private group, and I hope you guys can continue to carry that on as well. Because we're all here to help. We're all on the same mission. A lot of us have very similar, sometimes different motivations, but very similar motivations, whether it's to help our families, help out a cause that you care about, help out friends, and maybe pay back someone that's helped you, or just simply to help the community, the whole trading community as a whole, be a better, more welcoming place. Whatever the goal is, I do encourage you guys to help me on that mission as well. If you guys do get value, one way you can help me reach other people is obviously liking the video, subscribing to the channel, telling your friends and whoever else that trades, if you think that they could benefit from this, like this type of community. I definitely encourage you guys to invite people as well. But again, don't forget to like the video too if you get value. It's much appreciated. Beyond motivations. Okay. Yeah, you're welcome, bro. So did I miss anything? And again, if you guys have any concepts or topics over the next couple months that you feel you need some more clarification on, of course, on Sundays, you guys know that I go into a deep dive. It's like 2 to 3 hours of me breaking down concepts, breaking down what I think is going to happen and why, and then, of course, answering questions. That's a big part of the Sunday call and these calls if I'm on early, like today. Because when there's no news, right, we have rules, and we're not going to break those rules. We could make an argument for anything, right? We could find a move at any time of the day. All we need is a macro. Every hour has a macro. Another thing, every hour has a first presented fair value gap. So there's always something that you could trade on. right? But does that mean that you should and break your rules just because you can? No, I don't think so, because that's not going to be a repeatable thing. For some people, they trade for hours and hours and hours. I have a cap because I know when my mental bandwidth starts to get um, degraded, I guess you could say, you know, and it's different for everyone, right? Everyone has a different bandwidth and in their performance, and how long it takes for you to become mentally exhausted. That's something you want to pay very close attention to. If you feel that after trading in a session, you feel exhausted, like overwhelmingly exhausted, you want to definitely keep tabs on this, because the mental game, the mental edge that you develop, it's just as important as the technical aspect, right? Yesterday, ICT posted a crude oil image. Okay, any comments on that? Crude oil. We were just looking at that earlier. Well, we've been looking at that all week. Honestly, I think I mentioned this earlier, but it really just depends on what's going to happen in the Middle East. Apparently, I'm hearing reports that the Strait of Hormuz, which is the main problem, because oil got stopped in terms of global distribution, but apparently it's open. So I'm not too sure. I know there's a lot of heavy traders that are in this, taking advantage of this, like big people in the industry. Remember, everything's manipulated. Just because something happens doesn't mean that the market will or won't move. It's all manipulated by the algorithm. Where's liquidity? And if they have a narrative that can fit certain things that they want to have happen, they could reprice it to anywhere. Oil has went to zero one time a couple years ago, which is insane. $0 a barrel. How the hell does that work? Was it free? But it just shows that the heavy manipulation is pretty intense. The only way that I personally would start to be bearish on this is, for one, if there's a solution that happens that is sustainable, which they're in the works of doing that right now. And then, of course, we have to use our validation principles that we use, every day. 3 PD arrays. I want to see things get inverted. I want to see price decline, create an order block, then decline again. I want to see wicks get respected. Once we start seeing that type of behavior, then we can rest assured that price is most likely going to, get us back down to sell side potentially. We may hang around here for a little while though, right? No one can really predict what's going to happen with the war. So if we're just looking at this with the war aside, we kind of see, look at that. It's beautiful, huh? A new week opening gap from March of 2022. Literally what? 4 years ago, the same new week opening gap was referenced. That's pretty incredible, right? Just shows you there's never an expiration on any of these gaps. It doesn't mean you have to pay attention to them, but when you're in close proximity, you want to know what's in that area. And one of my students created an indicator for us in the private group that kind of highlights that: new day opening gaps, new week opening gaps, regular trading hours gaps. We got more indicators on the way for those in my private group. I think there's other ones too, potentially. But these are going to continue to improve as a perk for the private group. You can do it manually, right? You don't need an indicator, but it's definitely helpful. But again, certain things have to happen, right? We have to see that there's a solution that's sustainable in the Middle East. We have to see 3 PD arrays start to get violated, with order flow starting to help us confirm by upper PD arrays getting respected and bullish PD arrays start to get violated. We want to see that every high that gets left up to this point, if it gets swept, we want to see a wick. We want to see dynamic price delivery. We want to see immediate rebalances. We want to see speed and distance going to the downside again if we're going to get any real faith in this continuing to drop. Because right now, like I said, because we're still in the midst of this craziness, it may hold up. You know, the most important liquidity pools on a daily basis are the previous day's highs and lows. So we don't have to get it down here to trade it. We don't have to get it up here to trade it. We just simply have to determine whether this candle's high and low, which one of those is going to be targeted. So far, nothing's really confirmed that it's going to be bearish at the moment. Massive acceleration. Now if it starts to respect this, right, you see that's inefficient. It's inefficient to the buy side. It's a liquidity void from this level here to this level here. There's a void of liquidity. It's also obviously a new week opening gap, but it's inefficient to the buy side here. It's efficient to the sell side, but now we have a buy side imbalance. So what is price going to want to do generally? Well, when they see this, if they're going to go higher, they're going to offer buy side. It's going to trade through it, come back down, not invert it, but reclaim it as support after it's already sent price through with a buy side candle or a couple candles. And then it should create an order block once it retraces and then bust through that again. That would set the stage for us to know that now we have another change in state to go to the buy side. And then that could set us up to continue to race for these levels, right? The wick, break that into quadrants, preferably this one. And each of those things can be a target as we go to the buy side. But if it was to want to go lower, right, it may offer a buy side candle, fill it in completely, maybe just to this wick low, because there is sell side, buy side in this wick. So if they don't look to close this in entirely, that's going to be the reason why. But if it does that, maybe it fails to break through this, respects the upper portion. This is a bearish order block. If we can get that trade through that with buy side and then it displaces below this low of the new week opening gap again, that's how you would understand that this is potentially been or has been rebalanced, at least for the moment. And maybe it gets referred to later. But another thing too, if that does that, what do you notice down here? We have the same phenomenon happening here. We got sell side, buy side, closing in a wick, and then price is basically respected and then continue to rally from the midpoint here. But we still have a void of liquidity down here. That's inefficient. It moved a little bit too quick. So if this scenario holds and goes lower, that is something you want to keep tabs on. And then, of course, without it even getting here or up here, we still have this low. We have the rest of this gap up here that could be traded into and used as a framework. Okay. So does that make sense? Hopefully, freaking allergies, dude. Oh, man. But yeah, does that make sense, you guys? Beyond motivation, was that a clear enough explanation? And again, we could obviously go to the monthly chart. We could see relative equal highs up here. It could get up there, right? Depending on how we behave in here, moving forward for the next couple weeks, it's going to determine. But before we even reach that may be what you're gravitating to. That may be your main narrative, right? Or maybe this is your main narrative. As price trades up there, there's earlier things that you could pay attention to, right? Like the wick, any highs that form on a daily basis. Like those things are going to be more significant, more near term for a day trader than the overall equal highs. Although those may be what price ends up reaching for. For the sake of the world, we want to hope that it doesn't get up there because that's going to make oil and gas and pretty much every other product inflate in price, at least a little bit. You know, at worst, a lot of bit, right? At worst. But good morning, by the way, Nico. Sorry about missing that. Good morning, Rodri. Let me see. Yes. Okay, good. Yeah, that's pretty much what I see in price, basically, right? And unless something changes, obviously, we'll have to keep that perspective. We do have this large wick in here. The quadrants in this are significant because they're going to be used as dynamic support and resistance. So you can like take that, measure that out, just to have it, right? Just in case. Well, it is trading inside of that. So these levels are going to be reactive. It's going to respond to those in one way or another. See the 25%, 50%, it's not really getting below it. Then we got 75%. So, and then you can also, if it is going to go higher, you could take this low here. It's the most energetic current swing low in this price leg. So you take that swing low, you measure it to the high. You can see that we're in a discount relative to that range. Go from this low to that high. Well in a discount, at least relative to this. It's in a premium overall because, I mean, it's just absolutely ripped to the buy side. But relevant to where price is at currently, we could see that equilibrium is here, or the midpoint from this low to that high is here. And we're in a discount. So yeah, we'll see what happens. And again, if this is going to go higher, we could grade this price swing from this high to that low. And then you can get your quadrants in here. Okay. 25%, 50%, 75%. That's assuming that this goes higher. And in this case, that would be a market maker buy model framework. If it gives up the ghost and goes lower, we could then go from this low to that high. And we could see that, you know, if it gets up here, it's a premium relative to this low to that high, if it's going to go lower. And then we could frame this out as a market maker sell model, right? And we could trade it that way if it does do that. Okay. So yeah. So with that being said, let's hop back over to the currencies. So we got the dollar, like I said, it's retracing. We got to see how this behaves. This is a pretty solid breakdown. You notice the gap in here. It quickly looked to offer sell side. We got buy side, sell side, buy side, sell side inside that. So, you know, it has pretty efficiently traded that, but it may still look to want to go higher given the higher time frame. We'll see though, right? We took this high. If we go to the higher time frame here on this this perspective, we could see it's in a massive downtrend. We do have a quarterly high up here. Structurally, nothing's changed from bearish to bullish, unless it was to close above this down movement, up movement in here. Because in that case, you know, this high to that low becomes a breaker, but we're not really excited to get through that. It's not, you know, too much in a hurry, like demanding that it gets above that. So depending on how this inversion here is treated, also this quarterly fair value gap I've been using for the last couple of years, how that's going to be treated, it's going to determine whether we're going to have a long-term bullishness, which, you know, is well, maybe not so much long term, maybe just for the rest of the quarter going into next quarter. But, you know, we'll see. If it holds this and we get above this high, we could then look to target deeper price levels in a premium. But if this continues and, you know, say it completely goes on a rampage to the downside, then that's going to be potentially bullish for the other assets. If it stays bullish, though, it's going to confirm that this will keep going lower and will most likely meet this low or even some of this deeper sell-side liquidity for like the currencies and the indices. And then we got a breaker here that would be supported by a bullish dollar. And again, my true line in the sand is going to be up in here. If we move up, I think that is an order block. Let me see. Yeah, I would say this high, or simply the low here to the high, the 50% of that, I think that's where this is at. If that gets traded through and price just goes on a rampage, we already got one change in state here, broke above that. If it creates another one, now that we're outside of this, it may create a pretty dynamic price delivery. Say it creates another order block here, respects the gaps in here, and then breaks that order block. That's a double change in state of delivery. And that's enough for us to see this get targeted. It's relatively equal. And if that gets targeted, we're in a market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal. It would end up being first stage here, second stage up here, and then terminus. But again, that comes later, depending on how this transpires. We do have SMT at the lows, so that would be supported by a bearish dollar. And then this could be a potential start to the turnaround potentially. Okay. So yeah, you see this in here. There's sell side in here, buy side, right? This fair value gap is kind of left, right? If you look at the relationship here, this high and the low of that wick. I pointed this out before it targeted it. And look at where price closed on the body. I mean, that is precision, right? That's the level they were reaching to target, right? And then you could see the response from that, because why? It balanced the price range. Sell side, buy side, sell side had an imbalance there. That's the true part of the fair value gap that's important. You could measure out the whole thing, but where is there no other side trading present? In this case, where is there no trading taking place inside this imbalance? Well, we have this wick that didn't quite fill that in, and we have this wick that didn't quite fill it in. So when price started to go back towards that level, that's what it referred to, because that was the imbalanced piece of price delivery. If you look back, everything else is balanced in here, except that little piece right there. This particular thing took me so long to really understand about fair value gaps and balanced price ranges. It took me literally years to try to even observe that this is a little piece of price delivery I have to pay attention to. You know, it's true all day long, you know, and this is also true on the lower time frame as well. A lot of times these levels are very sensitive, you know, because it's imbalanced, it's one-sided, so they have to come back down and tag that specific level. Notice how it stopped right there. It dug a little bit, came and hit this bullish order block, but it left it open. Why didn't this whole thing get filled in? Because there's already sell side in here and buy side. It's already filled. Sell side, buy side delivery in that area. You know, unless it was going to give it up. And if it gave it up, then they'd be looking for something else to the downside. But all they did was reach for it, tagged it on a closing basis. It shows you the evidence that that's what they reached for. And then it respected it to the tick here, right? And then just accelerated. So yeah, hopefully that is clear. It's a very important thing when you're back testing. You want to pay attention to these types of things. And you'll be pretty shocked at how accurate you'll become when it comes to exactly where a fair value gap should be hit. And then if it turns, you know why, you know, and if it overtakes it, that's when you could use the whole fair value gap, because then that becomes a potential inversion level. And then the overtaking of something like that would also turn into an inversion level. And it's also a balanced price range, because we got buy side and then sell side through a fair value gap like that. If it returns into that, that's a beautiful inversion if you have a logical target to reach for, and intermarket relationships as well. Just increases the probability of you being correct. And it just starts to make sense, right? You go from, I don't know what price is doing, to, okay, well, this is a part of what it's doing, you know, and then alongside the other things that we talk about here, you're able to gain clarity over time. But yeah, so we'll see what this wants to do in here. I may take a trade on this today, depending on what happens. I want to see what the open's going to bring us. Trade potentially a continuation. If you go to the 1 hour chart, we could see London was basically here. This is London's high. We have London's low here. So low there, high there. So we're inside London high, London lows range. So that's the first liquidity pool that we're going to have to make an observation on in terms of whether, you know, the high is going to be taken or the low is going to be taken. If we're going to stay bearish, if the dollar is going to remain bullish, this should continue to drop, right? If the dollar's bullish, this should drop. So, you know, maybe it looks to sweep this out. Preferably it doesn't, right? Because then it'll start showing weakness, right? Like if a wick like this is respected, we are inside of a new week opening gap. 50% of that is here. We have the midnight open price. So we had the, well, it's 9 p.m. Pacific Standard Time, my time, on the west coast of America. So Pacific Standard Time, but 12 midnight Eastern. We see that the low of the day has formed, and we created a high. Now, if this is going to be bullish, we shouldn't really have to take this low out. We already set the low of the day. On the currencies, it's very reliable that London creates the high or the low of the day, depending on obviously what's going on, what direction you're headed in. But we are above the open price. So if it does, start to tank for New York session, it may look to try to come and fill this in, because remember what I said earlier, that's a huge inefficiency to the sell side. It offered buy side. It did offer sell side here a little bit. But a lot of times, especially if your narrative is bearish, which if we have bullish dollar, we should see bearish currencies. That may lead us to really rapidly offering the sell side. But again, I'm going to be more on the side of, let's wait and see what the first 40 minutes do from 6:30. And then we'll make a decision. If it just starts ripping to the buy side, then obviously we may have to focus there. But it all kind of just depends on what the dollar's going to do. But we'll be ready for it. I would be, I guess, more so leaning on the fact that it's probably going to be bearish. I think that's where my main focus is going to be. Now, if this high gets traded through with displacement, we could look at this as a buy model. And then this upper portion may offer a second stage distribution opportunity once it gets up there. We don't have to take an entry so close to this. We could wait until it gets, more deep into this high to that low. Which we could take this high to that low and grade that price swing. If it is in fact going to be a bullish run, we have 75% up here. So again, if it can get up there with displacement while leaving these levels untapped, we may be able to see maybe a small stop run, then a breaker that could set us up with the potential second stage distribution framework, which is definitely my favorite. And we'll see that Power 3 didn't really have a manipulation, really. It was just a very small one. So that's a bit suspect. London's very quick. So New York session may be a little bit slow. It makes sense for London to be fast, though, with these assets because they're European, right? So that's their market, or that's their time window. So, if anything, we'll get a continuation. If we leave this low and we break above this high, we'll have the down movement here. If we start to move up, I'm sure we could find some type of order block. Yeah, this down movement here on the 4 hour. Once this 4 hour closes by 7 a.m., we'll see what the reaction will be from this order block here. But we have this one too, right? The down movement. It's not quite showing that it's a bearish order block yet. I think it's because this candle is pulling back to the buy side again. So it's not necessarily closing down. So it's creating a smaller 4 hour bullish order block. So yeah, we'll see. If it closes like this, that's going to be interesting. We definitely want to watch this 4 hour wick too. We took out a previous week's high here with this wick. Who knows, right? If the dollar keeps going higher, that may be used as counterparty liquidity. We're also inside of this bearish order block here, right? The run higher. If we move up in time frame, we could see it was a bearish order block there, right there, in here. Okay. But again, we do have this SMT that's pretty interesting here. It's led to that huge run. Then we got SMT at these lows too. So that's not very indicative of continued sell side. But then again, it depends on what the dollar does. If the dollar goes higher, I don't care about bullish SMT. It's going to be subservient. And one is going to potentially have a higher resistance delivery. That would be this one because it already took the stops. And GBP USD would be the one because as a failure swing, if it does go lower, it'll be the one that is more low resistance because work hasn't been done here. Work was done here on the euro already. I mean, you could make the argument that there's equal lows there. So maybe that offers low resistance, but for the most part, the failure swing is generally a low resistance signature if it trades to it. So it should go quick a lot of times. That's what you want to see when you're targeting a high or a low. And then the one that has the actual stop hunt first, if it tries to return down to it, that's a high resistance signature. Like for example, a breaker. When a breaker forms, if it's going to trade through it and it's going to fail to be, say, a bearish breaker, say a bearish breaker forms and then it trades through it aggressively or attempts to, right, and doesn't move to the downside. A lot of times it could be looked at as a high resistance signature, especially if you're already bearish and you're seeing a failure for the bearish breaker to form. You know, many times that's why the breaker could be trusted too. It's already doing work, you know? So, you know, that's one piece of context to the breaker that's important. It's if it does fail, it's high resistance to get through it because it already took stops. Now, if it left stops, you know, like a mitigation block, well, like a mitigation block pretty much works in a very similar way because the mitigation block starts with the stop run and then creates a failure swing versus the breaker that has a failure swing first, then it takes the stops, then it looks to reverse, right? So they work very similarly, but the mitigation block's just a little bit more aggressive right from the start, and the failure swing is a little bit later versus the breaker that sets a failure swing, then takes the high or the low, and then gives you the reversal, okay? You know, these are a lot of things that most people don't know who talk about breakers this, breakers that. But now you know. So yeah. Again, do you guys have any more last minute questions? We're about to hit the open. I think we're going to go to the lower time frames a bit. Just go rest on the hourly. Again, we do have this wick in here. I would say that if we take out this fair value gap, that's an early sign that we'll start to dig a little deeper. If you notice, we got a very similar phenomenon here. We got the fair value gap there. We don't even have previous sell side fair value gap delivery, or just simply sell side offering in that area. You notice how it stopped right in that area. This is inside of a larger fair value gap that has offered both sides. So if it's bullish, it doesn't have to come down there. Preferably, it wouldn't come down there if it's bullish. But if it does respect this, and then we get another change in state here because we got one and then a secondary one, if this low is taken, this could be a very, very clean low-hanging fruit. And it should smack it, right? Because it needs to offer sell side there if it's going to try to go lower. But again, the larger context here being the weekly fair value gap, it's already been kind of traded through. So we'll see how this wants to behave with the dollar. Could have swore that I had... Could have swore I had the DXY on here earlier. Okay. So yeah, if the dollar keeps this up, we may continue. You see this wick right here? We have this high to that low. Price displaced came down and has respected this down delivery. If we break this wick here, it's very likely that we'll try to come and clean up some of these highs here. Unless it breaks down, right, and really starts to reject, we may have to stay on the side of that. I would prefer to see us go lower. But again, if things start to show an interest in changing, like say the dollar continues to rapidly decline, the higher time frame on the dollar does look like it's still not giving up completely for the decline. It has just came right back into a range. We're basically consolidated in the dollar from a higher time frame perspective. So that, a lot of times causes some problems. It may just stay stuck, right? It could do this for weeks, months. So the expectation has to be managed. And we just, if we're going to engage, we got to go off of intraday volatility, previous hourly highs and lows, 4-hour highs and lows, session highs and lows, anything in close proximity, while keeping in mind what's happening on the higher time frame, just in case something changes. So let's go to the 4-hour. We're gonna mark that off. Oh man. Should take a look at indices. They're looking very similar, right? They're in line with their correlated behavior, the currencies and the indices. Do you notice how there's this wick here? How it trades a little bit of this? Then we got this candle, offers buy side, offers a wick in there. And then it comes back down one more time for good measure and goes. We can see that this is still inefficient to the sell side here, this little piece. So if price does look to want to go lower, say it gives it up later, that'll have my attention. Just that little piece of inefficiency that there was no wick or any down candles trading through recently. So yeah, we'll see what happens. This is a market maker buy model. I think it's very reasonable to try to see if we could target this. Depending on how aggressive price is when it trades through that, we may have these that get targeted. Could see that it's a new week opening, a new day opening gap up there too. So yeah, if this gets up above this high, my attention is here. It's also a failure swing in there. There's no sell side offered in here. It's inefficient. It's a new day opening gap from 2 weeks ago. There's really nothing else. If you look and see the new day opening gaps, look what happens. At some point, they always offer buy side and sell side. And if they didn't, price generally comes back to offer it. If you pay attention, right? These are very significant levels in price. And when they're left open, they come back to them eventually. So you got to keep tabs on them because it can help you with narrative, right? Like if it breaks up above this high, instead of thinking, oh, well, just the highs are the target, you can couple gaps like this that were not fully efficiently delivered with the highs or the lows, depending on what's going on. And things could become real interesting. Got new week opening gap here. Got the high right there too. Something we do want to keep tabs on. Is that there? So yeah, that right there, that's significant. See the 25%? So yeah, that's the weekly wick 25% level. So if this continues, I mean, look, 25% down here. Wait a minute. Yeah, so 25% of this wick here, this largest wick, 25% there, 50% there. Look at how it beautifully respected that, coupled with the new wick opening gap. Displacement, we're at 75%. It's still respecting that. We're not quite outside of it yet. I mean, you can make the argument that this one also has quadrants you could use. And if it closes below, like it was here on these previous ones, we're still in bearish order flow, right? It just continues to confirm. We're not quite out of the woods yet. We're back inside the range here. It's nasty for the Nasdaq. And again, like I said earlier, it's because big money's on the sideline and there's so much fear. So people are not willing to push too aggressively on what they're trying to do yet. You know, they may be entering a little bit, but it's very, very minimal. You know, the participation when wars and stuff are happening, they have to wait a little bit until they can figure out what the expectation is. And then once they, you know, see some type of solution coming, if a good company is at a discount, that's how they like to go and engage. You know, but for us, I mean, we could do whatever because we buy and sell on a short-term basis. But you know, understanding this logic and how the investors operate, for the most part, obviously they probably have way more than just this, you know, specific perspective. But you could start to tell, you know, once you start seeing signs that things are going to have solutions, you know, and you start to see price open up, you know, and maybe we change state of delivery or price starts inverting things and gets out of like a consolidation, you can rest assured that participation is potentially going to increase because everybody wants to chase a big move, right? Even the big guys, you know, some of them at least, right? So yeah. Okay, so we're about to hit 6:30, so let's actually take this to a 4-hour chart. Keep this in mind. We do have relative equal highs up here, so that's pretty nice. So I do think that it should continue potentially to go higher. We'll see what happens here. If it's going to hold this, it's going to keep going. If we get up above this order, this inversion fair value gap, it should respect it as support. We may look to be aiming at the highs up here. Take this, drop to the 5-minute. Small market maker buy model. We got a stop raid. Second stage distribution will come from up here above this inversion. And we got relative equal highs up there. So I think that that could be something worthwhile. We got lots of layered liquidity up above this level. Let's see what happens here. Very small regular trading hours gap. Got previous regular trading hours gaps here. Crap. So yeah, these are significant levels to watch. See how it respects them or not. So yeah, I think market maker buy model. So that right there, yeah. So we got this level, we got 50% of the March 5th regular trading hours gap. Looks like it's accelerating. Open prices down here. Notice how price came all the way down to it. Tagged it. Kind of left a little bit more at the low. We definitely got relatively equal lows down there. So let's see how this first little while behaves. Again, we have very clear equal highs up here. Very rapid movement. You know, very, very tricky situation, right? Because it's back and forth, back and forth. It does seem like they are pretty interested in taking out the buy side, though. So a little run up through to the buy side doesn't seem unreasonable. And we got the market maker buy model framework. It's respecting a down candle here and a wick. And there's lots of gaps in here, as you could see, right? Also a daily order block. Oh, no, that's an old one. So yeah, big wicks, respecting the wicks. It's further reinforcing, unless we lose this fair value gap, it's further reinforcing the price may look to continue. We have a gap down here as well. So that's inefficient. So if we start to lose these levels, okay. So now let's see how this wick gets respected here. Big displacement. Again, if we lose this level plus a swing low, plus it respects this downside wick here, 50%, maybe it leaves this open. That's all supporting that these lower prices will get targeted. And there'll be a filled market maker buy model, which is pretty amazing because then you can try to go the other way. But again, I'm going to wait because there's no news. I want to get a little bit closer to a macro. I'm not going to break my rules. You shouldn't break yours either. Whatever your rules are for timing, you should really stick to them. So yeah, let's see this fair value gap here. We have one change in state here, and this may end up being a second change in state that inverts that fair value gap I told you a second ago is important. Which is right here too. It's 1 minute. No, it's not the first presented fair value gap. Yeah, big wick. Big wick in there. If it gets above this high, you know for a fact we're targeting the buy side. Otherwise, you know, we may continue to stick to what the overall temperature has been recently, especially if dollar can pick up a little bit. So yeah, let's see what this does here. I'm not in a rush. You shouldn't be either. So these lines, I know it looks kind of busy, but these lines are the regular trading hours gap from a while ago. So we definitely want to keep tabs on that. It's just supporting ideas, right? Supporting price levels. If it stays below this and displaces through that fair value gap, again, it's order flow starting to confirm that we are in fact going to target sell side liquidity. There you go. There's a second change in state. So let's see, can it get a return into that? If it does, we'll see a very rapid repricing lower. And then it'll try to clean up the rest of this in here. Watch that order block here. You know, keep in mind your model. Keep in mind the timing. You know, it's still a little bit too far from the macro for me. I don't like to trade super early, super quick at the open. We got relative equal highs here on the dollar. Right there, you see that? So we'll see if it wants to tag that. Clean that up for you a little bit. So yeah, as long as this stays intact like this, it's going to keep going lower. And we got that inefficiency down here too. The regular trading hours hasn't been fully traded to. We got to start seeing price displace again back to the buy side if we're even going to consider targeting bullishness. Yeah, there's that displacement there. Definitely confident that it's going to at least target that regular trading hours gap. We overtook the level I said is significant in order for us to trust that. So let's see how it treats it. It's balancing out this range in here. You see that? Back and forth, back and forth. So we need to see when it breaks out, come back into it, and then that could be a launching pad. The first presented fair value gap, we have one right there. Is it going to pop it up? Yep, there it is. So that's the first presented fair value gap after 6:30. Let's see. So we have this order block here. If it breaks above that rapidly and gets back above this fair value gap and then gets above this first presented fair value gap, we could target this and this. We're kind of just sideways right now, so let's let price speak a little bit. But again, if it breaks this low here, which I would prefer to see if the dollar's going to get some legs, but it seems like it's having a hard time so far. So the closer we get to the macro, the more conviction we'll have in a certain perspective. It's definitely a nasty, nasty condition, right? I'm curious to see if we can come down into this. And then, of course, if it sweeps that, then goes, I mean, that'd be pretty nice. Like if we could get a change in state of delivery, like an order block that forms after it sweeps that, I think that would be pretty favorable. If it fails it too and gets above this first presented fair value gap, we do have SMT at the lows there. You see that? Bullish. So if we break that first presented fair value gap, it's going to become very significant. Right, if it was to get back above that, that may even be used as a simple continuation. That's a model in itself, using the first presented fair value gap. If it trades through it once or twice, and then it returns back and then displaces through it, all you need to do is see it, tag it one more time if you have a logical target. Yeah, there's nothing in here that I'm too overly excited about. Whether you took a buy or sell in this, you'd be sitting here thinking like, okay, well, what is it really doing? Again, I'd prefer to see us take out the shorts, but we have our contingency plan if it is going to go higher, right? If it breaks above this, that'll be the first part of that contingency plan. If you wanted to be extra conservative, you could wait till this down candle gets closed above, because then that can be a bullish order block, and then all you do is find your model on the lower time frames. And then at that point, it would be supported going higher if the dollar keeps going lower. But it's kind of indecisive right now. So yeah, we'll wait and see what happens, guys. No rush. Yeah, if it breaks this low here, that'd be pretty significant. Again, that'll get us outside of this fair value gap. We'll have a refusal to even return to the first presented. And then we got these relative equal lows. We got the gap here. And then we also have a fair value gap down here too. Okay, there it is. Let's see how that's treated. It just turned off the SMT. Like I said, I'd prefer to see us go lower. Unless it gets up here, I want to see shorts take place. Nothing too interesting just yet. It's an argument for this low here of the fair value gap. If it returns into that, we got this large wick in here too. If it overtakes that like it is and comes back into it, that's a balanced price range. This low to that high, this could be a breaker here. Take these down candles, drag it over. If it return, it shouldn't come like deeper into this. It should keep going lower from here. This wick, it's a beautiful wick. See if we can't get price to respect that wick right there. See if it can't blow these lows out here. We are inside that regular trading hours gap. So we got to see, is it going to smash through it? That's what I'd prefer. I think that would be pretty favorable. Yeah, we'll see. I'm really trying to observe what this is going to do with this. If it's bearish, it's going to hold this. I'd prefer to see that. Okay, now we close that whole regular trading hours gap. Okay, now it's displacing. So yeah, now I'm starting to consider that. I mean, that offered enough for a 20, 30 point run. Wasn't necessarily very interested in that. It's really, really jerky right now. So yeah, we got this fair value gap here. If we get above that, that could be pretty nice. We are respecting this down movement here. There was a small move in there off the logic that it was going to respect this. So it did offer something reasonable, but it's very, very jerky, guys. So do not be in a rush. Let's see how it treats this midpoint here. Let's see, it could just stay range bound because tomorrow's CPI. Hopefully we could get something that makes sense here. So you watch that fair value gap here. We got sell side, buy side. I do not like the equal lows right there. Really don't like that. Shit, pretty nasty price delivery right now. Nothing I'm overwhelmingly confident about. See if we can't get price, given what we see here, see if we can't get it to take this high. We need it to get above this first presented fair value gap. If it does, it'll probably use it as a continuation. But yeah, let's see how it treats this in here. If it's bullish, it's going to respect this level here. Very, very nasty. Nasty, nasty, nasty. If it can't open up from this moment here, it's probably going to bang around. So I will probably continue to be on the sideline for this. Yeah, I'm going to stay on the sideline. I'm not even going to attempt. This is nasty. Oof. I've had a couple moments. Right, this one in here, I hesitated. Didn't get a chance to grab that one. Was thinking about this one. Hesitated on that one. Didn't really feel comfortable. We're in the middle of the range. This one here was a little more likely, but now that it did this, yeah, I'm not interested. We'll give it a little bit more time, maybe 7 o'clock. See what we could do in a little bit. This will be a bullish breaker if it gets above this high. But it's just nasty. So again, the risk is super high. And, you know, if we execute and it stays in the middle, there's a risk of that. The environment is not overwhelmingly trending one side or the other. We're just literally back and forth, like hundreds of handles to the downside. That's a 1,200 point range. And we basically are about to create another 1,200 point range back, going the other way again. So definitely a day where you could chop yourself up. No over trading and over leveraging. There's no reason for it. If you did engage something and you took a loss, you should not be going back in. At most, there may be one trade. You know, maybe this was something you took, targeted 20 to 30 points. I can't say if this high gets taken, it's going to take this high here. Yeah, this high here is taken. It should take this out, ideally. Yeah, it's stuck in the mud. Stuck in the mud. Let's see. What's that gonna do? I'm just gonna observe. I'm not willing to touch this. Let's see, can it finally move? It's smacked right over the macro, so we'll see. If we can get displacement from this, maybe I'll be a little bit more interested, but for now it's just sideways. That's a nice response. Yeah, it's not delivering quick. It's hanging around that level a little bit too long. The longer it hangs around, we don't want to see it hang around so long. We want speed. Yeah, it's not necessarily giving us anything really trustworthy for now. We'll see if that changes. We'll see. I think it's going to be hard to trust continued buys because of the war. Even if it looks great, still may cause a problem. nothing to do at the moment. What I can see is this high to that low. If it breaks that, that could be a mitigation block. But this, I mean, this is disgusting. This is inviting you to blow your account. Absolutely inviting frustration if you're trying to push too hard when there's not a necessity for it. You know, the times that we're in right now, it requires patience. It requires discipline. Just because you want to take a trade, just because you sat down at the chart, doesn't mean it's time to take a trade. You know, we're on the lookout, right? We're waiting for things to happen. Either a breaker, 2022 model, or the two models that I teach in my private group. But there's just really nothing. I mean, you can make an argument about this high to that low. It's gotten above it, still hanging around that. Dollar is not necessarily one-sided at all. It's an indecision candle. So that's not being very helpful. Overall, dollar looks like it could still go higher. Currencies are kind of sideways too. So there's really not much happening at the moment. We do got SMT at the highs up here. So maybe it looks to give it up. Yeah, that SMT we just looked at looks pretty nice. Yeah, there's no guarantee that we'll have any type of real displacement, really. Ooh, there's a little bit of move right there. We got this low, or the high, low, high with the failure swing. Let's see, can that be enough to push it? We're below that fair value gap. It's balanced. We got outside of it. So let's see, can that hold price? Looks like it may do so. Right there, wick, wick. If it continues this, you know, it should continue to drop. No, there's nothing telling us that it's going to break out of this range though, and that it can't hang around. We're in that type of condition where it could absolutely just not go anywhere. And just keep whipsawing everybody. Would be nice to see a displacement here. See if we can't get this thing to drop finally. There we go. So can it open up? So like I said, these equal lows are definitely something that was in the cards once it got down below here again. Let's see how much further can we get this to go. I don't think we're gonna have a big range today. That's the problem. because they're going to save it for tomorrow. Okay, so now we're back to the midpoint of the regular trading hours. So move to the 15-minute. Let's get a larger view. So yeah, it looks like it may look to come down there. Target that for a value gap down there. Could very easily be the case. Yeah, I think we're going to get that. We may get a retracement here because it's the start of a 4-hour candle, or it's going to open up and just rip. Because that new 4-hour candle's coming in. Go to the 4-hour chart. Got a change in state of delivery here. Hasn't quite closed below it though, so that's kind of an issue. See if we can get it to close below that and cause that change in state. We got 19 seconds. I really like this. This looks really, really nice. I like that. Okay, so now we're at the low here. It's a new week opening gap low. See how it treats that. And the low of the regular trading hours gap too. Again, we got that mitigation block. It's also a low, high, lower low breaker with this candle here. That may be a cause for it to continue. Notice how we got this stop run here. So again, it might be high resistance to get down there in comparison to the other ones. If they didn't take their low. Looks like they're all taking it. Nasdaq hasn't been the most energetic, because I think it's because we have this higher high here. Right, the higher high there compared to this too. Higher high. It is a failure swing, but this price delivery, we have a higher high. So it's got strength over the other ones. It's had the deeper run higher. So compared to the other assets, the Nasdaq is the strength holder. Yeah, I'm not sure if we're going to have enough energetic price delivery to get us down there. The other ones already took their low. I really don't like when that happens, because then if they start to retrace, the Nasdaq will fall in line with that. It could be a bit chaotic. Okay, yeah, so now it's turning. See, it might be just leaving that liquidity down there. Might just be building up a sell side liquidity pool. Again, we got this low to that high. All of this up here should act as a balanced price range if it's going to go lower. We got sell side, buy side. We do have these equal highs up here that are an issue. Then again, if dollar's going to go higher, we should be able to see it get down to something like this. Yeah, very chaotic morning. There was something right here that was relatively decent. Yeah, just really, really back and forth type of price delivery today. Nothing I'm too concerned about, unfortunately. So we got this low, high failure swing. Do have a SMT at the lows here. So yeah, the SMT may become a issue. Got this wick here. Watch that wick, how it behaves. You got to start painting what it's doing, right? Like, okay, there's a wick here. We failed. We have an SMT at the lows. Now we're really, really picking up to the buy side here. Strong retracement. Those equal highs, like I said, they could be a problem. They may prove to be an issue. On that daily chart right here, these things could be a serious problem for any type of downside delivery. So yeah, watch that wick right there. How that is treated is going to be very significant, because that's at the low of the regular trading hours gap. So we got one change in state in here. If it takes this high, that's a second change in state. So order flow will have then shifted from targeting the sell side to then potentially looking to target some of the buy side. One thing to observe, though, we are below this first presented fair value gap. So it's definitely spent a lot of time below it. Now it's having a hard time reacting to this. So yeah, this looks like it was just a stop hunt. Let's see, could we get a return back to this real quick? If it tags that and then delivers like a order block and then takes that, we may see this continue. Again, it's so all over the place. So you got to be very cautious. I have not wanted to take a trade. I considered 2 or 3 times, but it's too vicious. It's too back and forth. I like having 30-point stops at a maximum. And if I can't reasonably do that because the candles are just being so sporadic, then I'm not just gonna toss money in for no reason. See if this can give a follow through. We haven't really been able to have any successful follow throughs up to this point. See if it can follow through with this to the lows. That SMT is still there. But we're really, really respecting these upper PD arrays. Just breaking through and then resisting like this regular trading hours. That's a pretty telltale sign that it's not complete yet to the sell side. See if it can't give one more little jolt lower. I did take a trade on this little drop right here. Right, once it returned into that. I'm at break even now, so let's see. Let's see if it can follow through. If not, it'll be a break even. And that's totally fine. Getting back down to that midnight open, huh? I mean, that low is very, very close. See if we can't snag that real quick. It may come right next to it and then turn all the way back and get back in the range. That's the type of condition we're in right now. So I think I'll take that one right there. Take 200. Why not? Better than nothing. There's nothing wrong with nothing either. If you didn't find anything that made sense to you or was trustworthy to you, it's reasonable. Lots of untrustworthy price delivery. So yeah, price is now pulling back. So is it gonna leave that available? I mean, this trend line liquidity in here is definitely something to consider. But again, the lack of follow through characteristics, it's definitely real. It's definitely something you gotta consider when you're doing things. You know, all you need is 20 to 30 points. You don't need a 100-point move, especially when price looks like this. I mean, that was a reasonable short right there. So we'll see if we can get that low to be taken. It seems like it will. But all you need is 20 to 30 points. Like right here, if you would have taken this or were comfortable with this, right? It was an inverted new day opening gap from a couple of days ago. Or just simply, you know, you looked at this as a breaker potentially. It's returning back into it. You know, we'll see. We'll see if it wants to leave that. Because of CPI tomorrow, it puts it at risk to leave equal lows and equal highs because they want to blow it out. So it just depends on your risk tolerance. If you don't know what you're doing, obviously there's no reason to even trade this because it's not doing easy stuff. You have to know what you're doing. But yeah, like right here, see, it's failing to offer that. Very interesting. See, can it get down there again? See if we could tag that low. Yeah, I'm not really interested in throwing any other entries in. But let's definitely watch and see if we could tag that low. It's like a slow grinding type of delivery to that sell side. This is high resistance, guys. It is what it is. Small little spurts of low resistance, but even the gradual move lower, it's very slow. Very slow. We're in the silver bullet now. So let's see what happens. Couple the silver bullet with this. This is the first fair value gap in the 7 o'clock time. So that's either going to send us down here or it's going to totally lose it and then start another run higher. I'm 50-50 with what I believe right now. So with that being the case, there's nothing to even consider. It's too jerky, too all over the place. Oh, you saw it, the fair value gap? Good job, bro. Yeah, it was a reasonable move. The only thing that was, in this morning that was reasonable, I was able to bag that one too. Pretty sizable move. It wasn't like it was small, unreasonable. See if it can give one more. It's holding that fair value gap. All of this is balanced in here if it's bearish. It's all balanced and we got the equal lows there. Looks pretty nice. Got a fair value gap here. Fair value gap here. Got a breaker like I said earlier. Definitely don't want to lose this high if it's going to keep going in this move. Should be an intermediate term high relative to this time frame. Just one more little push. Let's see if it could finish it off. Again, it may hold it. It's just that's NFP for you, for CPI, pre-CPI, pre-NFP, pre-FOMC. Can it get there? Nah. See, this fair value gap high should not be taken if it is. Did we take that low? Oh, they kind of tagged it, huh? It somewhat tagged that low. Is that all they're gonna need? Yeah, it looks like that might be it. See what happens. Very jerky lower time frames. I mean, it's sporadic. definitely holding that area for at least for now. It's having a hard time though. The bodies are closing though. See what happens. Yeah, see, it's kind of stalling out now. I don't know. I don't know if we're gonna be able to get that to target the low. It's just when it does this, yeah, you gotta really consider, like, is it worth hanging around? Maybe it is, maybe it isn't. It's better to be on the side of caution. Preserve capital. Yeah, see. Almost got there. It almost tagged it. Did it tag it? Yeah, it almost got there. What a nasty move. Cool little short. No follow through. Just left equal lows. Now it's coming back, stopping people out. Maybe it does something like this. Let's see what it wants to do here. We're still below these levels. That's what kind of drove this lower. Regular trading hours, the new day opening gap from a while ago. Then we got this here too. The low, the March 1st fair value gap. Or a new week opening gap. Yes, one of those days, right? If you weren't really precise, yeah, you definitely would have got chopped up in the first 30 minutes. This is the main thing that I wait for. I wait for this to take place. Let the gamblers rush in there, trying to get, whatever they possibly can right away. And then it gets a little cleaner after. We talked about this too, so there was nothing wrong with that. So once it gets below that, if it returns, supports it, and then goes lower again, we would target these equal lows. That got fulfilled, came down, ran up and swept these people out, and then it immediately ripped to the downside again. Quickly got down to the low, didn't quite take the low. This is typical for pre-CPI, NFP, FOMC, because they're building liquidity. They may hang price in here, and then tomorrow, the nature of CPI is one-sided, so they may build that liquidity, maybe use it as counterparty, right? Hang around in here all day, drop down, take it as counterparty, and then CPI can continue to rally if that's what they choose to do and target the highs up here. Yeah, you see that inversion in there? This high to that low. Seems like this is a small market maker buy model. But yeah, this is sideways. Okay. We're just back to the center of the range now. Wouldn't be too unlikely that they take these equal highs here, though. It's reasonable. But yeah, not an environment that I'm willing to push even more. Already got one little one. It's good enough. Hit the daily minimums. That's all I'm looking for. I don't got to be in the big, huge move every time. We are most of the time, but there's days like this, and you got to be able to survive. Like I said, this isn't unlikely that it targets this. We're already so close. Yeah, now we set equal highs up there. So we got sell side, buy side. I would have liked it much more if we saw this happen after the run on stops. But, they may just continue to rip it here because the other assets did take the stops. The Nasdaq just didn't. It's the strength holder. It should be very sensitive to that 75% of the regular trading hours gap here if it's going to keep going. Preferably we stay very sensitive up here. Very, very nasty, huh? Look at the range right here. Back and forth, back and forth. Got a fair value gap, new day opening gap, regular trading hours gap. Okay, this is a higher time frame wick. Actually remove that. We got the fair value gap there. It's a pretty sizable move, huh? Through that high. Nice little scalp right there. See, so yeah, we got that first presented fair value gap up here. I can say if it gets through that, it'll probably offer another little continuation, get us up above the high. It's on a tear, huh? Really, really ripping up. Seems like we're in a small market maker buy model here. If it does want to get up there, honestly, I do think that it could just be range bound in this. It could just keep going back and forth like it's done all morning. I don't really have too much of a high expectation that we're going to break out of the range. Maybe it does. Goes against the expectation, but it's definitely in a hurry right now to purge out anyone that was short from earlier. See, how's it going to respect this here? Order block, fair value gap. It's going to hold price. Just might. Either that or we're just going to stay in this range, come all the way up, not hit the high, just stay in a range bound environment, leave both sides. At the moment, we have both sides. We have buy side and we have sell side equal highs and lows. I got a headache. Holy crap. See. Yeah, Reverend. Yep. Reverton. Definitely is. That's why if we make some, you stop. Knowing that the condition is what it is, what we've identified today, you have to just take what you get and stop. If not, you're going to give it back. That's the difference between someone that can be profitable in shitty conditions and someone that is not able to hold on to the money. Oh, what's up, Daniel? In a minute, bro. I'll see the crew question in terms of long term. Yeah, we talked about that earlier. So let's see what it does here. It is an order block for value gap combination here. I love you too, bro. Gotta hop on calls, bro. Want to see you more. All right, let's see what happens with this fair value gap order block. See if we can get this thing to go up to the highs. Looks like it respected that move. That's a pretty decent move, huh? See, it looks like they're really trying to punish anyone that was short. Still high resistance because he's deep retracements, but still doing something. Still held up. Very, very high resistance, you guys. I really hope none of you guys are over trading. Oh, okay. Okay, for sure, Daniel. It's awesome. Past funded accounts. Hell yeah. Let's see if the order blocks here can continue to hold price and keep us going higher. It seems like it's just gonna keep this slow, lethargic, grinding move to the buy side. So there's really not much to consider unless you were looking for buys and you aimed at something like this. Right? Once it broke the 50% from this high to the low, it makes it a lot more likely that it's going to keep going to try to reach for the buy side, given this is consolidation, just back and forth. So unless you made the adjustment, but again, if you took something earlier, like that short I called somewhere in here, and you were able to bag that and you took profit like you should have. Mind you, I'm not encouraging you to take trades. It's up to you. You got to make your own decisions. Not a financial advisor, but if you did take it upon yourself to engage something and you made something, when you see the environment is a shit show, you need to back off, right? Take what you can get and get out. There's no real reason for you to just keep pushing because the market will push you into negative. Yeah, it seems like the order blocks, you see how the order blocks just started to hold. See how they just continue to support price continuously? See, we just took out that high there from earlier. See, does it have enough energy to get up? Use this first presented fair value gap as support and then launch pad to the buy side. See what happens. We may get it. It may offer that. But we shall see. Or it could act as resistance and pull us to equilibrium. It could do that too. It has a chance to get up there, but we're range bound ahead of CPI, so I wouldn't put it past them to keep it. Leave it like it did with the lows. Oh, we'll see though. Okay, I like the wick respect here. That's a model I teach my private group. When a wick takes stops, you've got a down wick. That's part of that. And then the next candle respects it. The next change in state of delivery that's offered is generally a decent move. Give you guys that for free. It's a very powerful model. Very powerful. See, is that what's going to happen here? I got the wicks respected, down close candles. Wicks respected, yeah. Looks like we'll get it. See if we can get it up there. That's funny. The macro started at the low here, 650 macro. That's pushing us up to the highs up there. See, is it going to do the same thing like it did at the lows and stop? I wouldn't put it past them. See what happens. Do got justification to see it try to blow out that high, though. Whether it does it now or in the macro, obviously, is the question. And they may wait for the macro. Yeah, we're above the daily inversion fair value gap on the daily chart. So that may be something very nice. It may give a nice reaction. That justifies this here, the first presented fair value gap, being an even stronger point of interest to push price higher. It's a daily level as well, coupled with that first presented fair value gap. So it should be pretty sensitive. Beautiful. Beautiful. So there's another entry that I pointed you guys to. Said it could present you with an idea. So again, you guys have to make your own decisions. Now, I did mention that it's more likely now, once it got to a certain point, specifically in here, that it should hold this. If it does hold that, we have order blocks, order blocks, order blocks. The wick, like I said, if there's a wick that takes a previous low or just a previous liquidity pool, right? And it's a wick that goes into it, and then the next candle or next series of candles runs into that wick and can't even make it to the 50% level, and then you get a change in state of delivery, or if there's an inversion fair value gap, that works too. So a lot of times, all of this stuff's going to be together. Order block, the wick behavior, near a stop run, and then a change in state of delivery. All that stuff can happen all at once. And if it's inside of a time element that we like, I would back test if I were you. That's all I got to say. But that whole idea, the model that I teach in my private group, literally that I laid out before it took place, in a level that we laid out before it got there, it did exactly what we assumed it would do. So the short earlier here, something I called out, I talked about how when it gets below this, it could have offered a short there. Very hectic day though, you know, so it could have just hung around. You know, luckily we got the follow through, but nonetheless, we lean towards this. I talked about if it holds that, it should continue to drop, and then the target would be here. Once it broke through this, we wanted to look for the lows down here. It kind of fought to get down there. You notice how the sell side was super high resistance, but the buy side is a little bit less high resistance. It still has pretty deep retracements, but it's much faster, much more interested. This is the algorithm showing us exactly what they're actually focused on. They're focused more on the buy side delivery, right? Which this whole week has pretty much been that way. They gapped lower like we assumed they would in the Sunday call. They tagged this low here that we had as a target. We had a stop run. Look, pay attention right here, okay? We talked about the wick behavior and the model that I teach for the wick entries, right? Like how to frame it, how to frame a setup framework using a wick that takes stops and the couple candles that are around it, right? We talked about that. If you come over here and you look at the Nasdaq on this higher time frame 8-hour chart, what do you see here? Wick stop out. So it took the stops over here. Price came back on this candle, tried to drop down, but it failed. Once it does that, on the next change in state or inversion fair value gap that forms, that is an entry tactic. It's one of the main ones that I use, other than the razor model that I teach my private group as well. But that's one of my flagships, one of the ones that I personally, I guess, through my studies discovered. Obviously, it's part of ICT's concepts. It's using the tactics that he teaches. But I took a specific concept that he's taught, put a couple different PD arrays on it, framed it out with a scenario and time, and it's a model. It's just an example of the fact that you have the power to create your own models within the world of ICT. It doesn't have to be one of the 12 from the charter stuff. It doesn't even have to be the YouTube model. It doesn't have to be optimal trading tree. There's tons of PD arrays that ICT has created. Any of the PD arrays can have a model formed around them. Some of them you could mix a couple, like I just showed you here. But just keep in mind that, that should be an excitement for you to achieve mastery, because once you achieve mastery and you understand all the different concepts and how things work, what's involved in the models, which is explicitly showcased in the models that ICT is taught. Just think about the components that each piece represents. And then you get a little framework, which I teach some students that ask me how to do this in my private group. But yeah, you take the different components that you see from ICT's, already made, put together models, and then you just think about the other PD arrays. What fits you? And then over time, you can eventually build your own, right? And this is just one example of one that I've created. You notice how this was very fast? I mentioned that this high to that low, if it was to continue to rage higher, which, once it got here, I was pretty confident it was going to end up going higher. Obviously, there's a likelihood, like I mentioned, of it just not moving because of CPI tomorrow. But, you can't be too married to an opinion. You can't be fearful. And if something shows up that makes sense to you, you should engage. Don't be a weenie, okay? Manage risk and engage when it's within your rules. So what's there to be fearful of, aside from losing money? You just have to accept you're going to lose money. It's just part of the game. Don't even be fearful. You execute when you feel comfortable. And think about it this way too. If all this price delivery today was not comfortable for you, that's nothing to beat yourself up over. It was a very, very crazy start to the morning. But then 7 o'clock came and then instant reversal took place. And it was beautiful. So let me point something out here as well. Let me show you how many times this wick model that I teach my private group, how many times this thing shows up. So we got one here. Okay. We got one here. Wick, candle respect it. The next change in state. It's also a breaker. High, low, higher, high. Fair value gap. It's also a 2022 model. Stop raid. Shift in market structure. Fair value gap. But nonetheless, the wick model that I just taught you guys is here. Okay. The wick model I teach you guys is also here. Okay. Wick through the low. Would have preferred to see it take this out. This is one I would not have taken, even if I assumed it was going to reverse, because it's equal lows. That's a disqualifier. I don't buy equal lows. It has to take the lows. I don't care if it's this one either. If this is available next to it, I'm not doing it. The risk of it coming back is very great. Sometimes it won't come back. That's sometimes, most of the time it's going to come back like this, right? Run all the way up, pull you in, and then slam you onto the floor. Where's another example? So we had this one here, right? So this one on the larger view, this one right here too, wick below. The next candle, respecting the wick, couldn't even get to the 50%. It's inside of a PD array, right? That's another important thing too. When you find this, you want it to be at a specific level. You want it to be at a large liquidity pool, like one of the liquidity mapping lists of liquidity, right? Previous week high and low, month high and low, day high and low, session high and low, regular trading hours gaps, new week opening gaps, new day opening gaps. One of the quadrants in the wicks on the higher time frame daily chart, or any of the other higher time frames. At the right time, right? Like all of this move happened close to the macro. It was a little bit beyond, because the reversal move started inside the macro. If it's going to continue and you trust that it's, in this case, bullish, you can catch something as long as you find your model showing up. But a non-negotiable is the macro. You need to see something happening in the macro. It needs to either start the move or set up the move, right? Like set up the conditions for the move to take place. You know, whatever that is for you, right? We're all different. And yeah, you know, if you could put yourself in position where the move started, you can catch continuations if it started in the macro. But preferably you catch the trade in the macro, you know. But worst case scenario, you could just do something like this. You know, find your model in here. You know, there's a stop run here, inverted regular trading hours gap. This high to that low is a bullish breaker, right? It's a lot of the stuff that I wasn't mentioning real time because I don't want to pull you guys in too many directions. But this is all stuff that I'm looking at. That's another reason why this was something that I said should hold. You know, if it's going to be bullish, that should hold. And it did. So run on stops, shift in market structure, 2022 model continuation. Run on stops, shift in market structure, 2022 model continuation. It's also a breaker. This is also a breaker here. And then returned one more time. So could have used that. We got the wick model that I just taught you guys that showed up about 3 times just on this time frame going to the buy side. Well, you could put 2 and 2 together with the sell side, right? I'll let you guys go do that study and see if there's any other areas in price that you can identify the model. This low to that high, if you were short, if you were trying to go short, you have a breaker in there, a deeper retracement. So maybe, you know, you would have entered here. If you weren't satisfied with 20 to 30 points, you know, you would have got stopped out probably. But nonetheless, it shifted again, right? All you need is like an inversion here or here. This is where I called the sell-off earlier. I think Daniel took part in that as well earlier. And then, of course, I wanted to look at this. I wanted that to be a breaker. Even though it turned around eventually, I mean, that's still a trade. You know, it's still something that was 20 to 30 points. All you need is 20 to 30 points. If that's what you focus on, which I encourage you guys to focus on, you know, you would have had some pretty decent ideas. Let me see. So yeah, that move that we called out worked out. And the short. So these are the 2 highlights from today. And my stop was right there above the midpoint of that regular trading hours gap. And then we had that rejection here, new day opening gap, regular trading hours gap, breaker low. Why is it a breaker? Low, high that took highs, and then the lows. You can also make an argument if you move up in higher time frames a little bit. We have the high, low, failure swing, mitigation block. Okay. So that whole area was pretty significant with this drop. I mentioned it real time that if this delivers higher, it needs to create a down movement, respect this wick, and then displace through that as a secondary change in state. Because that second change in state would have then confirmed order flow to the buy side like this one did. right? Change in state here. Second change in state, broke through it, never came back below it. Sell side, buy side, balanced price range. It's a breaker. Got back above the regular trading hours gap that then got used as support. This other new day opening gap from a couple weeks ago or a couple days ago basically held in price. Breaker, balanced price range, and all the other things that we discussed. Okay? So you had multiple opportunities. I only called out two. Okay? The two best ones that I thought. And honestly, looking at price, there could have been an argument here. I did talk about this. Maybe you can throw that in there too as an idea I gave, because I did say this should hold if it's bullish. There was that risk of price consolidating today. There was a risk of it not giving follow through, but it did give a follow through to the buy side. And, there was chances to get in. But I personally wanted to wait for this. And then you see how that worked out, right? So now the question is, homework for you guys. Hopefully everything that I've talked about makes sense today. Hopefully you guys understand that the conditions pre-CPI, FOMC, NFP at the start of the month, at the start of the week, a week before, week of, and the week after quarterly rollovers, which we're in that time period right now. Hopefully you guys understand how you need to behave around those times. You do not push your edge. If you catch one trade and you identify the price is nasty in a disgusting condition and you just can't find your groove, if you take a trade that's profitable, go to the sideline. You may want more because maybe you only caught 20 points. If you see the conditions are a shit show, go to the sideline. You don't have to pass a funded account today. You don't have to make back any losses you took prior to today, right? You don't have to make it back right now. That mindset will make it so you either never make it back and blow your account, or it'll make you work harder than you really have to get out of drawdown. And you'll doubt yourself. Times like this where it's really choppy, or just it shake and bakes the whole session until a little bit later. Ironically, after 7 a.m. A lot of times that's the case. I'll leave you to go back test that. But that's part of the reason why I wait till 6:30, let the first half hour go, and then see what liquidity's left, see what it wants to do. Does it look like it's initiating a continued move, or are we reaching to a particular level that then gives us something like this, that turns around and changes direction? It did target the equal highs that I said would be a likely candidate to be targeted if it continued to go higher. We could see that it eventually blew it out in low resistance fashion. We're about to tag that right there. See that? So full target was met. Overall target that was allowed for was about 87 from potential entry, which was in here after the wick and change in state of delivery took place. So that was a pretty decent move right there. See this wick in here? This up wick. A wick that goes up, down, and then displaces through it. That's a balanced price range. You notice the bodies of the candle treated as such all throughout this price leg that opened up. This high to that low, once it breaks above 50% of that, which a lot of times you'll see it as a breaker, or these down candles will look like an order block on the higher time frame. Well, or on a time frame that's a little bit higher than this one. Well, that is also a balanced price range. A breaker is a balanced price range. The large wicks that go higher, lower, and then displace through, that's a balanced price range. The ones that go lower, if this was to drop, right? If this drops like this and is followed by a displacement, that's a balanced price range as well. So there's many different variations of balanced price ranges, but those are a couple of them. So there's lots to discover inside of this price delivery. There's lots to learn about yourself in times like this. So again, like I said, I hope that you guys got value from today. Hopefully you guys understand why the mindset has to be the way it is, the way that we've been describing. hopefully this shows you don't have to worry about missing moves. If you didn't catch anything in here, but all of this made sense, and you have your model in there, right? There's nothing to really worry about. Sometimes you got to wait. I make it a point most of the time to wait, right? So I appreciate you, Maddie. I'll probably talk to you tomorrow, brother. We'll be live in the private group. Have a good day, brother. Good morning, Fancy. But yeah, and if any of you guys, are here on YouTube with me a lot, and you like how this is ran. Again, I do have a private group. If you need extra help, I'm there every single day. We're live literally 6 days a week. I'm answering questions every day. You could DM me. I can help you guys really elevate. But again, that's only for people that really feel like they need that handheld experience, that want to do this every day with someone that knows what's going on. If that's not you and this is enough and you think you can handle it, I don't encourage you to join. But if you do feel like you're one of those people that needs extra help, just know that this community offers that resource. I offer my time every single day, unlike most mentors. And, I'm easily accessible, for the most part, unless I'm with my daughter or something like that, something, that gets in the way. But every single day for the last 3.5 years, I've been live every single day. So it's over 1,000 days straight being live with my private group. So, like here and there, some days missed, but nonetheless. But yeah, if you like what you saw today and you're part of the community and you want to do this more, and maybe you need extra help, or you just want to be part of a community that does that, the option is always there. And you could scan the QR code or go in the link in the description, or we could talk through DMs about it. But yeah, that option's always there. Okay. But with that being said, looks like we exceeded expectations with this move down here. A relatively decent move in here, gave more than enough for a short when we talked about it. And all through here, if there was something that made sense to you, right? We have that breaker there. If you saw that, you weren't wrong. If you maybe didn't hear me mention it, right? I gotta leave some stuff for you guys to do, right? Can't do everything. But yeah. So with that being said, if you guys have any questions about today's session, just let me know. Hopefully you guys got value. Don't forget to like the video, subscribe to the channel if you got value. Spread the word if you have anyone that you think would either be able to provide value or get value from this type of community, this type of experience. That'd be greatly appreciated, and I'm sure they'll thank you as well. But yeah, with that being said, God bless you guys. Thanks again for all the love and support. We'll be live here on YouTube again on Sunday. And, for those of you in my private group, I will see you beautiful people tomorrow. All right? So yeah, God bless, and have a good rest of your day, you guys.